What's up, Josh? Brian, hey, what's up, man? What's up, Raul? You guys having a good weekend? What's up, Jim and Arnie? Awesome. Yeah, same here, man. It's good to hear, Josh. I'm happy you're taking advantage of that. Flash. Yo, what's up, Rom? Sam, what's up, man? How's everybody? Curtis, welcome. Give it a few more minutes. I'm not gonna lie, I'm gonna try not to seem too distracted as I have the Masters playing on my upper left screen right here. It's coming down to the wire. Scheffler's still in the lead. I am not going to play my skateboarding post, Benito or Raul. I'm not sure which one of you guys is typing that. Rory is trying to make a pretty big comeback. That's who's been playing really well for today. All right, we're gonna get it kicked off here in just a minute, guys. If you can, Benito. Yeah, it's Benito. Yeah, the all caps should have gave it away. Getting it kicked off here in just a second, but guys, please retweet the tweet I put out. Try to get more eyes on this. Try to get more people to come in and watch this while we do it live, because I just think there's a lot more benefit if people can watch it live and possibly ask questions and pick my brain, as opposed to just watching it later in the evening or even tomorrow, right? So let's see. Oh, Yogi's talking about McElroy. All right, yeah, incredible. He just had an eagle, and he's just been lights out. Oh, great. There's a helicopter flying over right now. I live close to a military base, so let's let the helicopter pass. All right, well, let's get it started, guys. As always, make sure that you are subscribed and turn on the notifications to the channel. I just get into the real quick, just letting you guys know, if you need a broker, Cobra, that's my main broker. I've used all of the brokers out there. I still have a lot of brokers, but Cobra's the only one I use on a daily basis, and they're the only ones I would recommend using for day trading. Especially if you guys are short sellers or trading small caps and you need locates, these guys are the best. There is a link in the description. If you want to use that, you'll get 25% off commissions. You'll also get a month free of whatever platform you choose. Spike Heat, these guys are amazing if you want to backtest data and have access to historical market data. these guys are the guys to use. I used to do it manually. It's a pain in the butt. These guys save hours and hours, probably more than hours, probably days and days worth of work. And in fact, probably if I really wanted to count the hours I spent manually tracking data, it was probably like months of my life, right? So now everything can be done just by creating commands of code line to pull data from their historical data, and it really, really cuts down on the amount of work that you have to do. And I can't recommend them enough, guys. Scripts to Trade. These guys make indicators for TradingView and Thinkorswim, and I believe they're working on some other platforms as well. They have in-house pre-built scripts that they have created, from everything to pivot levels to volume forecasts to you name it, gap stats, everything. Super powerful, super affordable, and if they don't have what you want, they will make it custom. These guys can create whatever you need. Hands down, some of the nicest guys in the business, great to work with. Honestly, you guys really should be checking them out, because as traders, I say this every week, if you're going to invest in yourself, you need to invest in your tools. This is a business. You wouldn't try to run a sports store and not include certain things, not pay for cash registers, not pay for, you're only as good as your tools, guys. Now, typically, I will get right into our intro and talk about the bigger picture of psychological aspects of trading. This week's topic is a little more technical, and so I'm going to do the disclaimer first, guys, and then we can get into the intro. Okay, so as always, neither True Trader or any of its representatives are registered as security broker dealers. I'm not a licensed financial advisor. Nothing that I'm talking about is a solicitation to buy or sell any stocks. It's simply for entertainment purposes only, guys. So we got that out of the way. I'm going to use the charts. Let's use some charts to try to touch on what this topic is. Okay, so if you read the title in the description, it's talking about the way stocks move from points of balance to points of imbalance and then back again, right? And this is what creates, I don't know why I have a monthly ES chart up. Let's look at like a 1 minute chart. Actually, let's look at a daily chart on Tesla, and let's talk about some things, okay? So when I say balance, what we are referring to is that price has pulled back to support or trend, or like the mean, the area where it has balance. And honestly, like it's actually, I probably should have started by describing imbalance first, because that definition is a lot easier to kind of visualize. So for, because you need to have black and white definable aspects to your trading, you have to figure out like what you define for yourself as the mean or the trend or balance. And for me personally, I use the 20 SMA. I use it on every time frame, right? Anybody that's in True Trader already knows I have it on every single time frame. I use it as knowing when price has come back to levels where I feel like we have reached balance. And so let's look at Tesla over the last few weeks, okay? So Tesla was trending down, and you notice every time we come up into the underside of the 20-day, which is this white line, it rejects and we push lower, and we push up into it again and we push lower. Every time we push into it, we are pushing into what I consider to be balance. And now keep in mind, we're only talking about the daily time frame right here. So when it goes to the place of balance, two things can happen. We can find acceptance there, and we can then go higher, or it can reject that area of balance and go back to an area of imbalance below. And so as we go lower and we travel back into levels of balance, we then go back to levels of imbalance. And then when we come back up and we finally start to break these levels where they were rejecting, and obviously you have to understand this goes hand in hand with all other aspects of my technical analysis as well, right? So we obviously have to also look at resistance and support levels, and obviously this was the last area of balance that it had gone into the 20-day. And so as we come back down and we cannot make new lows, remember, when we go away from the 20-day, we are going into an area of imbalance. And so when we come down and we cannot make new lows, and then we come back up, if we break these highs here, we are now on the other side of where that balance was. And what happens? We go higher. And the same process repeats. We go into places, we go into levels where the price has reached imbalance. And you'll notice as we went higher, it kept going higher. Now, remember, I got to keep reiterating this. We are speaking about the daily time frame. And you have to understand that while this is happening and playing out on this time frame, the same thing is playing out on other time frames. So we'll get into those in a second. But for right now, we are just staying extended in an area of imbalance. And stocks need to seek balance. They can only stay out of balance or at a level of imbalance for so long before they naturally seek balance. And that is what happened when we got up to these highs up here. We were so extended, and price finally said, listen, we need to go and seek balance on this time frame. Now, just because we are extended or at levels of imbalance on a daily time frame, that does not mean that the stock is not in balance on other lower time frames. So let's check out some other time frames. So this is the 120-minute time frame, the 2-hour chart. And you'll notice we go to levels of imbalance, but we have pullbacks. And notice how we just ride this 120-minute 20 up this whole way. Balance, imbalance, right? Balance, imbalance. And that continues to happen. But again, even when you're at levels of imbalance on a 120-minute chart, you may be balanced or at levels of balance or the mean, the trend at a lower time frame. And you really have to understand how these time frames interact together and how they do this sort of dance. So here was when we were in that downtrend, and here was where we couldn't make the new lows and we went higher, right? And you'll see there are definitely times where even on a 5-minute chart, we reach levels of imbalance and have to revert back down. Remember, this organic manner of stocks going from balance to imbalance and back to balance again is what creates trends. It is the reason we see the gyration of the price. And once you really start to understand there's these two components, balance and imbalance, you also begin to realize that, like, a lot of times there is no trade. So when is there a trade and when is there not a trade? Well, we talked about this a few weeks ago in terms of understanding what type of trade you are taking before you take it. Because there's two types, right? There is trend joining trades. If you're looking to join the trend using the concepts we just talked about, you would be looking to buy the price or buy the stock when price comes back to levels of balance. So if we are pushing higher and we are nowhere near the, let's just use the 5-minute 20 as our level of balance for this 5-minute chart, anywhere in here, and you're buying Tesla, you're buying it when it's extended on this time frame, and you almost have to buy it with the anticipation that you're probably chasing and that it is going to have a pullback to this level of balance, and then you're going to feel as though, oh crap, I bought the top, right? So if you're trying to join trend, and remember, the opposite of joining trend is trying to catch a mean reversion trade, right? And we'll identify those as well. But if you're trying to join trend, you want to be buying when we come back into balance. If you're buying when we are extended, you are chasing. It's a form of, it's kind of like FOMO, right? You just were too impatient to wait. You're almost saying like, but Tesla's not going to come back to balance. They all come back to balance. Every time frame and every stock will always seek balance, and then it will always go back to a level of imbalance. It's just the natural way stocks move. So, you know, the point I was wanting to make with this is that there are times when, like, if you want to join trend, it requires the patience and it requires understanding where is balance, where am I buying it, where am getting the best risk reward, where am I having an edge. Because if you're buying it here, that's not an edge. If you're buying it here, that's not an edge. If you're waiting for the pullback to balance to where it has acceptance, that is the edge. And it doesn't mean you're going to be right. Can you buy it here and it go lower? Yes. Because guess what? when you're buying it here, let me see if I can draw a circle right here so that we can find the spot on the other time frame. Let me make sure it's going to show. Make sure, okay, it'll be there. Let's go here and let's make this a 20-minute chart. See if I can find where. Oh, I swear it was right here. Let's go back to it. Let me make sure it's going to show. Let's just turn that on too. There it is. Okay, so even though you buy it here and we have found balance, we are pulled back to the mean on the 5-minute time frame, doesn't mean we are in balance on all other time frames. As you can see, you are still very extended from the 20-minute 20. Now, you have to understand what time frames in control. You have to understand, are time frames lining up and there is a confluence of time frames, and you have to understand what your trade thesis is, because I see a lot of times where people, you know, are buying or selling a stock and they don't even really acknowledge whether they are trying to join trend or if it's a mean reversion trade to begin with. For instance, let's take the opposite idea. We were just talking about joining trend on Tesla and identifying levels of balance to be the buyer. It's the exact opposite. If your idea is that you want to see a mean reversion trade play out in your favor, you want to make sure that the stock has reached levels of imbalance, and you want it to be imbalanced on as many time frames as possible. So like, go back to the daily chart. The further and further we get away from this 20-day, the less and less I'm looking to join trend for a move higher. Now, it doesn't mean that you won't catch moves higher. Like, for instance, here is a very nice, you know, technical chart where you get these 2 tightening days, 2 inside bars, but the gap up really kind of takes it out. And then the gap up just makes it that much more extreme, that much more of a level of imbalance. And I'm much less likely to be looking for the long on something like Tesla. And I believe, I don't remember if it was in last Sunday, the last Sunday prep. I think it was. But we were looking for Tesla for a short. Why? Because it's getting out of balance. It's getting to levels of imbalance that are unsustainable. It doesn't mean Tesla can't go to, what is it now? It's like trading at 1025. Doesn't mean Tesla's not going to 1300. I don't know. But what it means is that there's a higher probability that comes and checks back in with levels of balance before continuing higher. And so we got the daily chart extended and we got the 20-minute chart extended. And there were times when even on the 5-minute chart, you're extended. So for instance, up here, you know, you can expect pullbacks to the 5-minute 20. Up here, pullback to the 5-minute 20. And guess what? You also can just be patient and wait for an actual trend reversal where you see the trend actually lose that level of balance and come lower, and then balance becomes to the underside of the 20, okay? And so understanding when a stock has found balance or when it has moved out of balance can help you identify where your edge actually lies, and also understanding the power of the time frames having confluence, right? If you want to join trend, you want the stock to be reaching levels of balance on as many time frames as possible. If you want to catch a mean reversion, you want the stock to be in states of imbalance on as many time frames as possible. And then you're going to get, you know, what I call the domino effect of time frames falling. So if you're extended on the daily and you're extended on a higher intraday time frame, like a 120-minute chart or an hourly chart or a 30-minute chart, and you're also extended on a 5-minute time frame, and we're like, let's just say we're looking for a short, so all these are extended to the upside, and then you're also extended in imbalance on the 1-minute chart, what's going to happen first is the first time frame where that price is going to seek a level of balance is going to be the lowest time frame. The 1-minute chart will find balance, and guess what? If that's not enough balance for the stock, it will lose that time frame and it will seek it on the next level up. So the 5-minute chart, then the 20-minute, then the hourly, and then the daily. And so you have to understand how it's just a domino effect of time frames seeking balance. And that concept alone can keep you, it's not so much about, it is about identifying opportunities, but it's also, a lot of this is about knowing when to not be involved. Because I see a lot of people that want to, like for instance right here, they want to short Tesla as we're getting extended to the downside. It's like, acknowledge that we're getting out of balance to the downside, and we're going to have those pullbacks, and be more patient. And also, if we're at levels of balance, why are we trying to be seeking a mean reversion trade when we're not objectively, rationally looking at the chart and saying, look, we just came back into balance. Let's wait for it to get out of balance again. So that's kind of like the gist of the topic I wanted to talk about. And listen guys, it's extremely nuanced, and there's so much more to it, and I don't want this to be a 3-hour Sunday prep. So what we're gonna do is over at True Trader on Wednesday, after the opening hour of trading's over and we go into the lull, I'm gonna do a webinar on this, and it's gonna be in depth. We're gonna go over how to actually use this in your trading. And if you guys aren't part of True Trader, there is a 5-day trial. It's $30, guys. And if you were to sign up for the 5-day trial today, or well, not today, but for Monday, your timer starts. You have Monday through Friday. You'll be able to be at that webinar, which is going to be exclusive for True Trader guys. So if you're not in True Trader and you were thinking about maybe using the 5-day trial, now would be the time to use it, because I'm going to do a webinar that covers this whole topic, and it's going to go extremely in depth. And again, it deserves its own webinar because there's so much more to it. I can't just get into that much on just a Sunday prep. So hopefully you guys were able to understand kind of the rough idea of that concept. And then if you want to learn more about it, come over to True Trader. At minimum, do the 5-day trial, guys. I honestly think when you come over and see what we are offering, and it's mind-boggling to me the prices it costs to be a part of a community like True Trader, but that's besides the point. So I did want to talk about one other thing. We had a trade from last Sunday prep that was, a lot of people's feedback has been they want me to talk about trades from the previous prep that we actually took. One of them was the CVS idea, and we did take that. And here, let me see if I can play this. This is the idea. I gotta make sure I have my speaker muted so it doesn't give me the feedback from this. Let's try this. If I wanted to swing this, I'm not wrong until we lose these lows. The idea here is that this has already triggered a valid setup, and that was where the risk needed to go. This comes from a weekly chart, right? Pull back into the weekly 20, push up, pull back higher low, and then we break. So the target is these highs, and we didn't get there, right? So the target is still intact, and we've had this big pullback. So we're getting better prices right now. So I feel like you can buy this with risk down here under these lows, and you're getting a really good risk reward on the name. And when you get these kinds of risk rewards, it's okay to be wrong a number of times in order to get one right, because you're getting the risk reward that is going to cover all the losses and some, okay? So I may be willing to throw this on as just a swing by itself. Guys, can you hear me? All right, sorry. So what I was going to say is that I'm apologizing that you guys aren't going to be able to see my mouse because this is just an image on OBS or whatever. Am I still muted? Guys, let me know if I'm still muted. Yo, can you hear me, guys? All right. So anyway, this is the daily chart, guys. And so you can see where we took this trade, and you can see from, the clip I just played, what we were talking about risking against was under that pretty much 98.50. So the risk was so small that this is one of those things that where, you don't often get this asymmetric of a trade. And that is actually kind of the beauty of the swing trades, is that when you're patient for your entries, the risk reward is just phenomenal on these, right? So let me see if I can slide this up to where you guys can see the day trade part of it, or not the day trade, but like the intraday price action. So you can see we bought it on the 4th, and then we added on the 5th, and I was scaled out in halves, right? Sold the half, and then the next half. The target was the 20-day, and that's me being impatient. The real target would have been all-time highs, but this thing worked so quickly without any real heat at all that I just thought that it was too good of a gift to not be taking those profits into the underside of the 20-day. Which, if you think about what we just talked about, right? We just talked about balance and imbalance. Well, we were just talking about the 20-day being that level of balance, of acceptance, where when price gets there, it may go back lower, and it could accept there and go higher. But I really did think it was important to just lock in at that spot when it gives it to you that quick. So that was a trade that I just wanted to quickly go over to review. And right now, I guess I don't have to do the disclaimer. I'm used to doing the disclaimer. Already did it. So we're just going to jump into the actual prep. Let's do the ES. Let's get back to time frames. Always want to start on the higher time frames with these. So let's look. Nothing's really changed since last Sunday, right? We don't have a new monthly candle. But like I said, it wouldn't be that surprising to me if we start to see these monthly candles maybe start to contract and stop being so wide for a little bit. We definitely have the ability to have made a lower high on that last month's push, but we won't know unless we come lower first. As of right now, let's see the weekly time frame. You can see, and what I'm going to do is I'm going to kind of tie in that balance and imbalance concept with what we talk about today, guys. That'll help a little bit, right? So we have come back into levels of balance on the weekly time frame, and therefore this may be where we come back and head lower, right? Do we go back into lower areas of imbalance, or do we accept here and then try to go higher again? We will see. But there's still, let's see, let me get to the daily. You can see we're also at levels of acceptance or balance on the daily time frame. So these are kind of lining up. This is what we call time frame confluence. Now, on the weekly chart, let me see if the weekly chart, we came into balance from the underside, right? So this was extended to the downside. We pushed up from the underside. When you look at the daily, you'll realize the level of balance that we've just found acceptance at is the 20-day. We've pulled back into it from above, right? So that is the difference. We are also right there at the 200-day. There's some very, very obvious levels of support and resistance that I'm looking at as the key levels for this coming week. The first is going to be that weekly 20, which is right up there around 45. What is it? 45.13ish. 45.10. Sorry, I can't see it with the microphone in front of the screen. And then after that, you're going to have these highs up here around 45.88. And then, of course, these are very, very important highs. We get over those, and we may actually make a run back up to the all-time highs. That's what the bulls are going to really want to do. I think first pushes up into these levels are going to offer really good short opportunities, especially for day trades, right? And again, always keep in mind, guys, that if the bottom is in, the ingredients were there, right? I'm not saying the bottom is in. I personally don't think it is. I do think we go lower. My opinion don't mean shit. But if it is in, the ingredients were there. We had the low, the higher low, and then the break. So this may have ended this downtrend, right? You guys can clearly see we were in a downtrend, and we had done what stocks need to do to put in a bottom. In order to stop heading lower, you must first stop making lower lows, and you must start making higher lows. Okay, I see a question that's about these. He's asking if I drew the dotted lines myself. These are alerts. All the dotted lines, guys, are my alerts for the coming week. And if you look at them, you'll see I have them set to expire on Saturday, right? So these are all good for just this week. Pretty important to make sure I address that before we head on a little further. All right, so those are the levels of resistance. The weekly 20, these highs from last week, and then I believe this is 2 weeks ago's highs, right? On the downside support, it's going to be last week's lows is the first levels. I'm going to call that 44.44. And then the 50-day slash, what is this level? 44.15 is going to be right above that annual pivot as well at 44.03. So that's the next level if we were to get through last week's lows. Obviously below that, I don't think we're going quite this low this coming week, but I've got alerts down there, and these ones I believe were set. Whoops. I believe these ones are set to expire a little bit later. Oh, these ones are actually older. Let's make these. We'll give these till the end of next week. Let's see if this one's the same. Yeah, so not sure why they're still there if they were set to expire. Sometimes TradingView is a little bit whatever. This is the rut row level, and the rut row level is still good. All right, so yeah, again, I don't think we're coming down here to this 42.60 area this week, but I will keep that alert there in case. But that would be the next level I'm looking at as support. Again, when I'm looking at this daily chart, I'm looking at it and thinking we have just pulled back to levels of balance. So in terms of what am I willing to trade in the coming week? Am I willing to be long? Am I willing to be short? When we come into levels of acceptance like this, or levels of balance, I am willing to be unbiased. I'm willing to short rips. I'm willing to buy flushes. I will play long and short from these levels. When we get really extended, like we were 2 weeks ago up here, I get really, really focused on the short side of things, knowing that the broader market is most likely going to seek bounce to the downside. And therefore, I want to make sure if I am going to long something, it better be in a strong sector. That sector might need to have some balance. And there better be some really good setups and momentum in that name, or else oftentimes would be hands off. When we get really extended to the downside, like we were back here in late February, even though I think that the market's entering a bear market phase, you're crazy to think I'm getting long or getting short a bunch of names down here. I'm focused on the long side. So again, I'm just trying to tie it all together with how I use these concepts to actually form my plan for the week, guys. So we have just pulled back to some levels of balance on the daily chart. And if you remember, we're also in balance on the weekly chart, guys. So I will play both sides of the, I'm unbiased this week, even though I think longer term, I do think we head lower. And again, I already told you, that's just my opinion. That doesn't mean anything. And if things change, if I start to see stuff that disagrees with what I think, I'm quick to throw my opinion out and get a new one. All right. And I highly suggest you guys learn that trait too. So here's the NQ. We're going to go into the NQ. Now, again, we have come back into the 20-day from above. Let's go back to the weekliest at least. Now, the weekly chart, we found balance, right? We pushed up into the weekly 20, and we literally look at the highs from this week here were 15,260, and the highs from this week here were 15,268.75. So we literally broke these highs by like next to nothing, right? And then just slammed back down. So as far as on the weekly chart, we found balance, and then we are trying to head lower now. But when we zoom in and look at the daily, you'll see we have just come back into balance on the daily chart. Not only that, but it's definitely levels of support. If you draw, we could just continue this pink line a little bit further right there, and you'll see definitely some key levels, right? Here it was support, here it was support. Even though we were going a bit above and under here, when we lost it, that was when we actually came lower, and then the first big push up into it turned into resistance. So here we are, we're coming back into it. That's eyes on the ball right here, guys, because if this is going to bounce, this is where you want it to bounce from. If you're a bull and you want the tech stocks and the growth stocks to show some life, this is where you want them to bounce, guys. So let's look at just levels of resistance and support. First level of resistance is Friday's highs from last week. The next level is going to be this quarterly pivot up here at 14. Let's just call it 14.8. It's a little bit lower than that, but again, these are just ranges. I'm not playing them like they're etched in stone to the penny. And then, of course, above that is those highs, those recent highs from March 29th. Below that, I am looking at the monthly 20, which is this orange line here. It's let's just call it 14K, the round psychological level. And for the person that was asking about the dotted lines, also understand this. I've said this multiple times, but if you're new and just watching for the first time, I set these alerts ahead of those levels. I don't want to know when the price hits that level. I want to know when the price is approaching that level. So I hope you understand that concept too. Like, you'll see this alert here is for the monthly 20. It's quite a bit above it because I want to know when we're getting close. The next level I have marked down here is 13.9s. And let's see. You guys probably don't understand this if you don't follow all day faders on Twitter, but these levels here, you'll see S1, S2, and S3 with their prices. Those are what he has dubbed VWAP Boulevard. They are the VWAP prices, the closing VWAP prices from days that had abnormally high volume. So you'll see this high volume bar right here is this candle. VWAP on that day was 13,658.5. And this is a very profound concept in small caps, but I have it applied to my large cap charts. If you guys want this indicator, Scripts to Trade, they coded it for him and gave it away to the community for free because the guy who kind of came up with that concept wanted it to be given away for free. So that was really nice of him, and I do have it on my charts. But I like how that price level also lines up with some very, some levels where price history has interacted with before, and you can see that it actually had significance. So that's why I have that alert set there. On both of them, actually, you'll see S3 and S2 both have significant price history at those levels. Again, I don't think we're coming quite that low. Like, if we were to get through this last alert I have set, the next level I would have is that 13.5 area, which is your monthly and annual pivot. And then below that is these lows. I don't think we're going to get down there this week, but again, never say never. It's the stock market, guys. Bitcoin, just because I like to follow the cryptos. Let's see what we have cracking here, guys. This is a good level of support. You notice it's a trend line, but it's also your 50-day and your quarterly pivot. So, and we just recently triggered the long to end this downtrend, right? Let's see if we can look at it on a weekly chart. Again, this is exactly what we were talking about on the ES, right? We had this downtrend, and then you get your low, you get your push up, the higher low, and then we break it. Now again, the difference between it on the ES and on Bitcoin is that when Bitcoin triggered it, it was going right into the weekly 20, which is balance on the weekly time frame, right? So as you can see, as soon as we hit it, as soon as we triggered the long, we're now pulling back. So, long triggers don't always work. Failed long triggers create really powerful short triggers. So if this fails to push higher and then we come lower, Bitcoin could be in a lot of trouble, right? So you guys are definitely going to want to pay attention to this level right here if they were to lose it. We get under this level here, let's just call it 33K. We come back under 33K now after triggering that long. This could really kind of get capitulating to the downside. I don't think that's going to happen, but I just want to point those kinds of things out to you so you understand the things to look out for. So let's go back to the daily. So this is, one of the cool things about cryptocurrencies, especially Bitcoin, is that the technical analysis works really well on them because there's not much else to use on these things unless you're like reading horoscopes and shit. Like, I don't understand what else you're using to understand the fundamental value of Bitcoin. It's kind of just like whatever someone's willing to pay for it, but the only thing most of us have to go off of is charts and technical analysis. So it blows my mind when I see how well it behaves technically. So it wouldn't surprise me if this is just your breakout, your trigger, and then we're pulling back to support, to test support, and we're gonna go. That's what I would like to see happen if Bitcoin's gonna stay strong, guys. You want it to hold here. I mean, it's so many different levels and so many different reasons for it to hold this level. The 50-day, the quarterly, this trend line here. If it holds and we then break above the 200-day, we might get going, guys. But the first level it'll need to get through after that's gonna be that 53,000 area. And again, I don't trade Bitcoin. I trade the equities that follow it, so that's why I talk about it on a weekly basis. That's it. Let's get into the sector analysis, guys. I feel like I'm going to be going over my time this week. Sorry. Stock market sectors. This is barchart.com. It's a great product. It's a great way for me to go and quickly be able to see what's going on with the sector outlook. What stands out? The tech stands out. 4% was the weakest sector last week. Healthcare stood out. Energy stood out. Consumer discretionary, that's weak. So one of the things I did this week that I have not done in prior weeks, instead of just telling you where I see these sectors and stuff, I literally made 2 lists. I said sectors where I would be willing to put capital at risk for long trades. Remember, because I'm pretty unbiased coming into the week, right? And I made a list called sectors where I might short. And so let's get into, we'll start with the sectors I may long. We'll go to the ETFs here. And so what I wrote down, communications. So let's look at communications. Why would I be willing to long communications? Well, because we just pulled back to the 20-day, right? So we've had 4 straight red days, all the way right back down into the 20-day. To me, that just seems like the path of least resistance most likely is going to be a bounce play soon. Doesn't mean it has to bounce here, doesn't mean it will bounce. But if I'm going to be playing probabilities, this thing had a big pullback. And it, not only that, but it literally had just broke above these important levels here really recently, right? We've been in this crazy, like we've talked about communications for a while. They have been so weak. They started this bear market a month before any other sector. Look at this. The highs in communications were August. That's nuts. If you look at let's look at the SPY highs were freaking beginning of the year, right? Like, so keep in mind, this has been arguably one of the weakest of the sectors, but we're finally breaking above some levels here. And we're just getting this pullback to the 20-day. I think I'm be willing to put money at risk on long ideas, and there is a ton of names in this sector that have volume and range. That's what we need, right? Next sector I have is bio. Bios look pretty good. We've, again, pulled back to the 20-day, pulled back to the 50-day, finding some balance. Another one of those names, another one of those sectors where we've talked about just super sold off. Now, keep in mind, it did just push up into the underside of the weekly 20 and it rejected. But as far as where we're finding balance on the daily chart, it's the 20-day here, and I have to think that this is a good level for some of the biotech names to want to launch from. We'll see. And let's see, tech, XLK. Now, I have a caveat written on this one, and that is tech. It says, I'm willing to be long tech from here or lower. So we've come into the 20-day. It's a big pullback into it, and if we go lower, then we're finding imbalance on the downside. So we're either going to find balance here and bounce, or we go lower and we'll get to a level of imbalance and we'll have to seek balance. But XLK is also on my stocks or my sectors where I would be willing to short, and that is if we get the bounce from here sometime early in the week and we jumps back up into the underside of the 200-day or the weekly 20 and we spike back up into those levels, then I'm willing to take shorts on growth and tech names, guys, because then we are going to be slamming right back up into levels of resistance. All right, and let's see, consumer discretionary is the other one, which is XLY. This is another one. Found resistance at levels I thought it really should. This really looks a lot like the Nasdaq chart that we showed you, where it broke these highs just ever so slightly, slammed back down. We're back into the 20-day. Found that coming back into levels of balance and acceptance. So I'm looking at this as kind of oversold for this. We're right back into support. So there may be some levels here where I would be willing to get long on consumer discretionary names. So sectors I may short. This is retail. Retail found, broke this trend line, came down lower, and now we're spiked right back up into the underside of the 20-day. Right back up into resistance, right back up into that level of balance, and we, lower highs and lower lows. This thing may come lower. I'm looking at retail sector for shorts. XLF, finance. I'm looking at a spike back up into, I wanted to find balance first, right? I'm not willing to short it down here, but if we push back up, look at this, the quarterly, the 20-day, the 200-day, the 50-day, the weekly 20, all of this right here. If we were to spike back up into those levels, I feel like there's some good shorts in the financial sector. Healthcare. Now here's the one that you're going to be like, oh, strong sector. This is why CVS was on our watch last week. But look at it. Finding levels of imbalance. Doesn't mean it has to reverse from up here. But if you think I'm getting long healthcare names up here instead of waiting for pullbacks, you're crazy. I'm looking for fades on names that are pushing higher, getting extended, finding levels of imbalance. And let's see, consumer staples, XLP, right? Yeah. Another one. Finding levels of imbalance. Finding it's getting extreme, it's getting extended. This is what I like for overbought reversion setups. And that's another key part, right? When I'm looking for these kinds of shorts, I'm trying to get a mean reversion. And remember we talked about the dominoes falling on the time frames. If we can catch something that's extended on the hourly, 30-minute, 20-minute, 5-minute, 1 minute, we look for that 1 minute to come back into balance and lose it. So the 1 minute time frame falls, the 5-minute time frame, and then we can get that cascading effect and ride that wave back down. And like I said, tech's also on the shorts if we pop back into these areas. And same with XLY, which is consumer discretionary. If consumer discretionary slams back up into levels of resistance, I'm looking for fades. So that is the sector analysis. Let's get into the ideas because I know I'm going to go over my time this week, guys. First, we're starting with longs, strong stocks looking for continuation. Tesla is and no, I did not mean to type Tesla Q right there. That was funny. Let me get a sip of my coffee, guys. All right, so Tesla, I'm looking for this to come back into balance. Where's that going to be? The 20-day, guys. 20 days line up really nice with that quarterly pivot and the psychological round level, 1,000. So 995 to 1,000. If we flush down there, now check it out. When we come into balance on the daily time frame, it's going to look even better if it's at a state of imbalance on a bunch of these lower time frames, right? So if we get extended down like an opening Monday morning, tomorrow morning flush off the open, and we get extended away from the 1 minute 20, the 5 minute 20, the 20 minute 20, and it just flushes down hard. When you buy that and you scoop it, you're scooping it when it's coming into levels of balance on the higher time frame, and all the other time frames are going to give you that added conviction that it should seek balance on those too. So it's going to get so extended that it's going to be magnetized back up to the trend. And once it does that, you can be locking in profits, and you can see if it then begins to have those time frames start cascading. So that's the Tesla idea, 995 to 1,000. Remember, it's $1,000 stock. I'm trying to find somewhere in that $5 range. It's like saying a $9.95 stock. I'm somewhere in that 5 cent range, right? So I know you guys are like, that's a 5-point difference. It's $1,000 stock, guys. Next idea is SLB. This one, I like that it got really nice and tight in here. And if you guys know what I look for, this break below this level right here was a bit of a short trigger. And if it fails, when we get back above 44, let's just call it 44, this thing should be seeking those all-time highs. Or not all-time highs, I apologize. I think it should, it's not all-time highs. It should be seeking these 52-week highs. So the idea I have for it is buy the dip back to the monthly pivot, 20-day, come back into balance. You can see, I think it got a bit ahead of itself on Friday. Would like to see that come back in a bit. Yeah, just a nice flush back down into these levels, get some scoops on, and I almost think that this one is, if you wonder why I have all these drawings already on this, it's because it's been something I've been watching for a swing trade anyway. I love this formation here, just this big old cup and handle forming. The alert is set down here because that's where I want to buy it for the swing trade. But it's setting up really nicely up here, guys. So I'm looking to get involved in this on a flush either Monday or Tuesday, 4150 area. And if it closes strong, it is the type of situation where I may keep a piece on to see if this is a good spot to be getting a swing position established. But definitely worth a day trade on this name. Yeah, liquidity is good enough too. I just had to verify that real quick. It's trading about 10 million shares a day. That's fine. And the last name in this list, Apple. I wrote down 168. But I also put a note saying I would watch it off Friday's lows. Like, depending if we gap up or gap down tomorrow morning on the broader market, it's going to, change this plan a little bit. very well, if we gap up tomorrow, I'd probably buy a flush right into the 20-day, risking Friday's lows, which pretty much is the 20-day quarterly pivot. So that 169 area. But if it were to lose that, 168 is your monthly pivot, your 50-day. You got your VWAP Boulevard right there. I want to just keep plugging that for my boy. And it's Apple, right? Like Apple is not going to, if you know how to size correctly, it's got so much liquidity, it's got enough range, but it's also it's not like trading these small caps you see these guys on Twitter trading where you're gonna blow your account up, right? This thing is gonna be very organic, price action, tradable. Like I love trading Apple, guys. Yeah, so that's the last one on that list. The next section is oversold reversion setups. So in terms of balance, imbalance, if something's oversold, we're talking about the daily chart. We're looking for it to be in a state of imbalance. The name on this list is UPS. And you can see we have sold straight off, all the way down to the monthly 20. No bounce yet. Friday started to bounce. My game plan is to play this off Friday's lows. Flush into that 186 monthly pivot. 186.88 is the pivot, with risk under the lows and possibly swinging this for a bigger move back up. But keep in mind, it had a major breakdown here under these levels. So you would probably want to be using those as a good spot to at least take some profits and understand the way stocks move. It's not like you're going to get the 20-day all in one day. It took 1, 2, 3, 4, 5, 6, 7, 9 days to make this move down, right? It's not going to just rebound all the way back to the 20-day in a single day. If you're looking for the bigger picture trade here, you got to be willing to size appropriately to handle the gyrations, the balance to imbalance and back to balance again, because those gyrations, those trends are what shake traders out because they're not ready for them. You can't just think things are going to just go straight to your target. So that's the only idea for that setup. Next, we're talking about the short setups, weak stocks looking for continuation. And I wrote down, if consumer discretionary pops back into that 180, let's just pull it up. If it pops back into that 185 to 186 range, which is right up in here, that's where I'm going to be looking for names in that sector as possible fades on pops for them. So the first name on my list this week is Starbucks. And if you don't think Starbucks is consumer discretionary, then you don't know what that term means. I am looking for, what did I write down? 86. I wrote down 86, but I also wrote a note saying wherever the 20-day is. So a big spike into the underside of that 20-day, and I'd be looking to fade Starbucks. The next idea is Disney, another one that is definitely consumer discretionary. 137 to 138 is where I want to short this, but I also wrote down another note on this one, and that is I kind of want to long this. I want to long Disney because I feel like we had that inside day Friday. We've had this big move down. Do you see these levels, guys? Like these levels down here are important levels. So if these hold, this may be the low of this move. So you kind of have to find risk. I'm looking for on the long idea, I'm looking for a break of Friday's highs, and then I want to buy dips and join trend because I think the trend may be back up towards, if not just a gap fill, maybe the 20-day, and then I would look to fade it. So it's kind of a twofer on this. I like the short, I like the long. And that's it for that section. So the next section, the last section, actually it's not. The next section is overbought reversion setup. So levels of imbalance, we're looking for that mean reversion. First one, CVS, guys. Now, it's not too extended yet. I would like to see 108.90. I'd like to see this upper trend line tested, that quarterly pivot. I'd like to see one more shove up there. But remember the healthcare sector, right? This is extended. So if this sector starts to roll over, I'm looking at CVS. This is going to be, I'm praying for those 108.80s. Next is Walmart. Boy, has it been on a tear. Remember, retail looks like trash. Walmart and Target ripped last week. You could probably apply whatever I'm about to say to Walmart. You can probably apply it to Target too, but Walmart, I'm looking to fade. I'd like to see it higher. The higher the better. 160 is the first area I'm interested. And trust me, going fine. There's not too many times where you see Walmart get this extended from the 20-day and it doesn't have a big slam back to the 20-day. It needs to find balance. And like the chart shows you the blueprint, okay? So here we are. It's like we already have the answers to the quiz. Just answer the question the way you're told to answer it, guys. When the stock gets this extended from the 20-day, what the hell happens? It snaps back to the 20-day. So can it go higher? Yes, I'm praying it goes higher. But when this thing is ready, that's a big fade, guys. ABBV. Again, no different. Like, this thing does not get this extended very often at all. And this thing has just been straight up. I'm looking for that one. I wrote down higher to better, but I'm thinking 180. 182 is that annual pivot. Again, if you guys understand the way stocks move, you don't have to find the top. You can literally just watch for those time frames to start cascading, and you can set risk against highs and just see if the trend reverses and takes you with it. These are my favorite setups, these overextension parabolic moves, and it's because they just seem so easy to trade. Like, I feel like a lot of people struggle with them because they try to find the top. If you learn to not try to find the top and just watch for that price action to show you lower highs and then roll over in the time frames domino effect, these are so headache free. And the other thing is, a lot of people get into trouble when they see something like this flush and they're not looking at the daily chart and they go to buy it because they think it's an overextension to the downside. When something gets this extended, it's very dangerous to start trying to buy the dip on it. So understand that too, guys. Okay, and the last one on this list is MOS. And I like it. I don't know where the top is, the higher the better, but 79s look great. And if it wants to roll over sooner, fine, I'll be there for it. But all these names in this section, you don't got to find the top. I promise you guys that. All right, so I do have one other name this week, and that is a swing trade. And it's a slower mover. One only trades 1.5 million. Actually, let's see, 1.7 million shares per day average. But I like this base that it built. I like that it broke out above it, and I like that it retested it. And now we're here into balance, right? Imagine that. So I'm kind of looking to buy dips on Deere. And you have set risk. I just kind of want this to be like, look, we're testing the top side of this channel we just broke out of, and now I want to head higher. I'm just trying to join trend, guys. That's it. So we found balance. Let's wait for other time frames to come into balance, put something on, and see if we head higher. That's pretty much the idea there. Swing trades, and there's no rush to get into it, right? Like, this might not be this week. Maybe it gaps up tomorrow, and I'm not chasing it, right? I want really good prices on these kinds of things, guys. Just like that CVS trade. So that's it for all the names on my list, guys. I'm going to take some questions, and let's see here. See if I can find them. DMC says, what's the shortest moving average you use intraday on shorter time frames? I just used the 20. It's on everything. The 20 SMA. Oh, wait. So, okay. I use the 20 on everything, but you have to understand, if you start using lower and lower time frames, that's faster moving, right? So I understand his question, but I don't use, I know a lot of traders use the 9, the 10. I use the 20 on everything, guys. Let's see. Regarding your trade, this is from Chet Manley. Regarding your trade idea, what did you add at the end of day? Are you asking about the CVS trade? I'm not sure what that question was in regards to. Let's see. DMC says swing trading is where the real money is made. Yeah, well, it's where the big moves happen, right? But the thing is you have to size a bit differently for swing trades. But I agree with you. Don't think I'm disagreeing. I'm not. But with day trades, you can have tighter risk and larger size. So it's not that you can't make big bucks on day trades. You can. But the swing trades, a lot of times they're just a lot less headaches. Questions for later. How do you keep track of your trade ideas? Pen and paper or other method Secondly, what's the shortest EMA used on intraday timeframes? So I keep alerts set on everything, right? And what I do a lot of times, like I'll do it right here just so you can see. Let's say I want to buy DE down around this pivot here, this monthly pivot. That's kind of where I want to buy DE, guys. I didn't really say this, but I kind of want to buy it against 400 psychological level. It's retesting that breakout. So let's put an alert here. Let me see if I can get it to. There we go. So we're gonna put an alert, and what I write is Sunday prep. Scoop. Swing. You can put a bunch of stuff, right? And I'll make it good for, let's just make it good till the end of the month. And that's what I do. It's really simple. I just put notes. I put a bunch of notes in my alerts, so when the alert goes off, I know what it was for. And again, like I don't use any of the EMAs or anything. I just use the 20 SMA. And it is an SMA, and it doesn't mean I disagree with EMAs. It's not right or wrong. It's just what you have found works for you. Javier said thoughts on CVX at 167.10 or cut and try at low 165s for a long. Let's look at it. Yeah, XOP and XLE have been really nice. And dude, remember XOM was on last Sunday's prep, right? This break, this nice little curl off the 20-day, guys. That was what we were looking for. It just didn't really behave right, which I find to be the case with a lot of the oil names. It just, for whatever reason, they like to just start to go and then stuff you, and then like you look back a few days later and they're gone, right? So XOM was kind of annoying, and I probably think that CVX is going to do the same BS, right? Like CVX is no different. It's going to move with that oil sector. You can see you could have had this drawn like last week when we did the XOM charts, but break above, slam back down, fake breakouts, right? And then boom, now it's gone. So now I get what you're saying, right? Now it's kind of like, okay, it's confirmed. We are pushing, so we want to buy the dips, right? What levels were you mentioning? Let's see, 167.10. Let's check those levels. So, there's two things to look at, right? I know a lot of people subscribe to the whole previous resistance becomes support, and I do too. But I also like to look at previous support stays support, right? So like I like to ask myself, what levels does it keep holding, right? You can see this 164 area was really big. That was what was holding. You definitely have some levels in here in this 164.60 area. But after that, right, like after we get out of this chop, the first real dip was here, 167.60. And one of the things I looked for was that on really big volume, and it wasn't. It wasn't abnormal volume. I want to see when that level tests, I want to see tons of volume come in to just give me that conviction that like, oh, that was a level, right? Like see the volume stand out over here on this midday dip to these levels here, this 163 area. That's what I like to see, especially when you had it the day before too, right? Big sell-off, big volume, and then an important pivot gets created right there. Yeah, CVX though, here's the thing, is like, just like we don't need to guess the top on those parabolic moves, you don't really have to guess the bottom too when it's flushing. You can let it flush and then look for it to be out of balance, like imbalance on some of your lower time frames, and then look for those higher lows and know that it's going to magnet back up at least on the lower time frames. And then if you're right, you can set risk under that level. Hopefully that makes sense. I know that was kind of scatterbrained thoughts. Chet says, yes, that was on CVS trade. It was coming down hard. Why would you add? Let me go back to the chart and I think what you're talking about, I think I actually know what you're talking about. Let me show you. You can tell me if I'm right or wrong. Are you talking about right here when I added on the 5th? At the level, I added at 100. I'm not sure if that's the question you're asking about. But that ad, if that's what you're talking about, that ad was while I was at the golf course, and it was a pre-placed order and I was not watching it. Like, and I'll tell you why. I don't need to watch it. It's a swing trade, guys. Like, there's nothing, I don't have anything to watch. I'm literally, I know where my stop's at. So my stop was 98.50. I had a 99 average. I was already only risking 50 cents. Actually, it was a little over. 98.39 was my stop on CBS. So if you're talking about the ad was against the psychological level of 100, and I knew if I added there, my average was still going to be 99.50. I've got about a point of risk, and I know that my upside is way up towards the 105 area where the 20-day was. So like the risk reward was still phenomenal, and I didn't care one bit about if this trade worked or not. And that's the other thing. When your risk reward is really good, you don't really have to care too much about if the trade works. It's just about letting it do what it needs to do. We have no control over the outcome of a trade. We can just have an idea, place our bets, and let the dice fall. That's it. And you know, my risk reward was good enough that I didn't care if this trade worked or not. It happened to work. That's great. But I was literally playing golf on a golf cart when I got the alert on my phone saying that I had filled the ad. And it was funny because I couldn't get the screenshot to post to the chat room while I was at the golf course, and so I had to like just type everything out to the guys over at TrueTrader to let them know I added to my swing position. So I hope that's what you were referring to. Like, hopefully I addressed your question. I'm not sure if I did or not, but I think that's what you were asking. Sonny, let's see, wait. Brian is saying, what is a private price placement at the market? Okay, so I think you may be confusing two things. I think you're talking about a at the market priced offering or a private, a PIPE, a private investment in public equity. So those are two different things. And I'm not sure which. I think you're probably asking about a PIPE and what is a PIPE. Well, a PIPE is when people don't have shares registered for resale, so they can't do an offering, or maybe they don't. There's other restrictions on their ability to raise capital, and so they do a private placement, meaning they find a fund or a syndicate or some institutional investor to give them money for shares which cannot be sold back into the markets until later, at a later date. But they're still dilutive eventually down the road. They're still very toxic very often. You have to ask yourself, like, why is a company doing a PIPE, right? So if you want to know more about pipes, I have a YouTube channel. You guys are on TrueTrader's YouTube channel right now. If you want to learn more about reading SEC filings, I have my own YouTube channel, Ricky Analog, where I have videos about all those different aspects about reading SEC filings. So if that's what you're asking about, go to my YouTube channel and watch till your little heart's content. Okay, Sunny D says NVIDIA. Honestly, guys, I wish you guys would ask me more specific questions because I don't know what you want to know about NVIDIA. I think I'll give you my opinion on what I see, okay? Broke out of the downtrend, really oversold to the downside. We went straight through the 20-day gap down. We're through the 200-day. I feel like the path of least resistance soon will become to the upside. So I wouldn't short down here, but if it were to spike back up into the 252 area, I'd probably look to fade. If it were to flush a little bit more, maybe 220s, I might look to scoop it. Other than that, it's kind of like I said, just kind of like with the tech stocks, guys, right? Down here or lower, I'm looking to long. If we spike back up to those resistance levels, I'm looking to get short on these names. So like, is it any, it's funny, I literally type in XLK and the chart looked the same, right? Look at that. Do these two charts not look the same? It's insane, right? Okay, Sunny D, thoughts on Amazon stock split? I think it's going to be good for the stock in the long term. I don't think anything's wrong with the stock. The only thing that you guys got to pay attention to is, I know you guys saw what happened when Apple did their split, when Tesla did their split, and they went higher, right? So everybody thinks that's going to happen with this, and everybody wants to run in and get on that train. We're in two different markets. When Tesla and when Tesla and Apple did theirs, oh, were you guys able to see the NVIDIA chart right there? Did you get, oh my God. Can somebody let me know if when I was talking about NVIDIA, did I have the chart up? Or was I just talking to you without the chart? I feel like an idiot if I didn't have the chart up. Somebody let me know real quick. Okay, I apologize. I forgot to switch scenes on OBS, but here's the chart. Like I said, we're overextended to the downside. We're back into levels of support. If it goes lower, I'd be looking to buy it. If it spikes back up here, I'd be looking to fade it. And I was pointing out the fact that XLK, which is the tech stocks, looks, or the tech sector, looks very similar. They look like the same chart. And I said earlier about tech, here or lower, I'm looking to get long tech names. If we bounce back up into levels of resistance, I'm looking to fade tech names. So I apologize for that, guys. And then we were talking about Amazon, right? So like I said, Amazon is not the same broader market. The ES and the NQ and a lot of sectors are very weak, and we may still be in a bear market. You can't just assume the stock's going to have the same reaction when they do their split as what happened with Apple and Tesla when they did theirs. So that's kind of, I hope you kind of understand what I mean by that. But you know, if the market firms up and we head higher, I think Amazon looks really good. I mean, look at this chart and then look at Deere. They look the same, right? Like they just had these long bases. Amazon, the problem with Amazon is it broke up, and it even did it twice, right? So we came up here twice and then failed and then came lower. It's not the best look for it, but technically still in this base, still building this like very, very long base. How long is this? 442 days. No, 638 days. Am I reading that right? It says 442 bars. So that's 638 days. That's if you add the weekends in. How about some Trex, Chief, on a pullback to 61? Yogi and his low volume. I mean, what I see when I look at this chart, the first thing I see is all these wicks to the upside. Just feel like there's, every time it's getting up there, it's getting sold back down, and it's just been in this perpetual downtrend. I mean, flip it upside down, right? And I just feel like maybe you have like a fundamental thesis, like maybe you know the company. I'm not familiar with the company, but as far as the chart goes, if you flip it upside down, then I look to buy that. But as far as what it looks like right here, just see a lot of selling. And again, Yogi knows me, guys, but if you don't know me, understand one thing about me, and that is you guys can have any idea you want. I can't tell you your idea sucks or is great, because all ideas can work and all ideas can fail. The only thing that matters is that you have a plan and you execute your plan and you stick to your shit. But me personally, I can look at a chart and go, I don't see it. I don't see a reason to buy this name. Now I will say, sticking with the theme, we are at levels of imbalance, and it may want that 20-day, right? So that is the one thing I think it has going for it here that might be worth a trade. But I think it could also come down to 58 first and then want to do that. So sorry, Yogi, I'm not trying to bust your idea. And Yogi wants to know about wall bounce play 73. I see it, yeah. Now I see it a lot clearer on this one. What I think you're looking at, and that is just that this is just so out of balance, right? Just completely extended from the 20-day. But again, let's see. I mean, the one thing I don't like about some of these is that they just lost these recent lows, right? So like this, lost that. Let's look for other times when that happened, right? Like here. So look how much further this came lower after it lost that recent low. Yes, you got the reversal. Yes, you got that suck back up to the area of balance, but it went a lot lower first, right? And the same right here. Like, I mean, this thing seems to like to do this a lot. Look, here's your low, and then when we lose it, it comes a lot further. So we just lost this low. Like, I'd much rather it come down to 68, 69, but again, we are very extended from the 20-day. So you have that going. He says, you won't like this, but SYNA around 163. But think a bounce is possible if it holds that level. I like that one better. Yogi, come on, man. I like this one better than the other two ideas. This one, you know, is really, really extended from a lot of levels. I think this one has a much better chance of bouncing. Now, Yogi, go ahead and tell everybody why I don't like this one. What's it missing? What is this one missing that the other ones, at least I didn't see, did Wall have it? Oh, Wall didn't have it either, but SYNA is even worse. That's right, Yogi. Volume. That's it, guys. Okay, Brian did clarify he was talking about a pipe. Yeah, so like I've got a whole video on pipes. I'm sure High Trader could probably find that link. If there's no other questions, guys, I'm starting to lose my voice and I want to watch the like I have to refresh this this Masters feed, but if they're still playing, I want to catch the end of it. So yeah, guys, keep in mind, sign up for the 5-day trial at TT, and I'm going to do a webinar in the middle of this week about, we're going to go much more into depth about balance and imbalance, okay? Stay safe, plan your trade your plan, guys. I will see you Monday morning, tomorrow morning at the market. Let's crush it. Peace.